Today I want to talk about Google. We will go over some updates around the company, as well as discuss valuation compared to the rest of the major tech players. And finally, I'll give my opinion on whether Google is a buy, a hold, or a sell. So if you enjoy the video, drop a like down below, and if you want to see more videos like this one, make sure to subscribe. Google's been a very interesting stock over the course of the last few years. In just the last month alone, this stock is up 16%, and over the last 6 months, it's up about 11%. In the course of the last year, however, Google has ran up over 40%, and in the last 5 years, the stock is up almost 153%. However, over the course of the last 5 years, Google has had its volatility. We could see back in 2020, the stock fell by 30% in a little over a month. And then again in 2021 into 2023, the stock fell by over 40%. And really, there were two big things going on in 2022 that caused the stock to fall so significantly. The first is the overall economic conditions that were going on within the United States. We were seeing interest rates increase at a very rapid pace, and this was causing a lot of companies to pull back on their ad spend. The second reason for this fall comes around AI. AI has been something that Google has talked about for a number of years and has been always perceived as the front runner in AI. However, ChatGPT came onto the market and quickly surpassed Google. And ChatGPT has ownership from Microsoft, and Microsoft owns Bing, and Bing was starting to incorporate some of this technology very quickly, and this scared a lot of investors at Google, even bringing back Larry Page to help with some of these projects. Since bottoming, the stock has made a run of almost 75%. A lot of this having to do with general macroeconomic conditions improving slightly as the Fed has talked about the lowering of interest rates. But we have also seen Google make some moves around AI. They have rebranded away from Bard to Gemini, and this has kind of helped with some perceptions of their AI technology. There's also been talks between Google and Apple about bringing Google's generative AI technology to iPhones. And a partnership between Google and Apple on generative AI technology is not far out of the realm of possibility. Google currently is paying $18 billion a year to be the default search engine for iPhone's Safari browser. And this is a partnership that has brought Google a lot of success over the years. When you think about iPhones and the fact that everyone has one in their pocket, you really start to realize how much of a hold Google has on this market, especially the search engine market. When you go onto your iPhone and you scroll and search something up, you are using Google, and they are collecting that data and helping advertisers actually target audiences that would be interested in their products. So this overall is not only benefiting businesses as they can target customers that are actually potentially going to buy their products, but it also helps consumers really find products that they may not necessarily be exposed to. One thing I like to always keep in mind is, will Apple try to go after a certain market? We have seen this in the past with Apple where they will do certain things. They will come out with their own chips. They'll try and go after electric vehicle markets. They have a tendency of trying to take on these bigger projects. However, when it comes to the search engine market, I don't see Apple getting involved in this. They're already getting a large payout from Google, and when you look at the search engine business, there are really only two players in it currently. You have Google, who has 90% market share, and then you have Bing, which is Microsoft's search engine, and they have somewhere around 6 to 10% market share. So there's really not a whole lot of room for players to come in because most people are already comfortable either using Google or using Bing. And as I mentioned, Apple likes to go after these markets, especially early on, to see if they get some headway. However, they've been looking at the market and seeing Microsoft's OpenAI ChatGPT as well as Google's Gemini really consuming the market. And what that ultimately leads Apple to do is cut a lot of their projects. They have kind of gotten into something similar with the electric vehicles, which we have seen over the last 6 months or so. They have actually cut that program as well. And Apple is mainly focusing on their core core business right now instead of expanding into these other businesses. And I think that's smart for Apple. Allow these other companies to kind of fight it out and invest large sums of money into these projects, and you can kind of focus on being more profitable and what you're already good at. And this would be a huge partnership for both of these companies because Gemini right now is the clear number 2 in this market. They are not as readily adopted as OpenAI's ChatGPT. However, if Google partners with Apple and gets Gemini on the iPhone, they would overnight gain access to millions of customers who would be using Gemini over OpenAI's ChatGPT. Right now, customers have to pay $19.99 per month to use Gemini Advanced app. However, I think that if Gemini gets on the iPhone, Google will start to backtrack away from these charges because they will have a lot more users at their fingertips. Getting users' data, I think, would be a lot more valuable than them charging this $19.99 per month because a lot of customers will be turned off by a price tag like that. They won't necessarily want to pay for Gemini. I think that it would be more important for Google to focus on kind of expanding how they utilize Gemini and how they monetize it through advertising instead of charging customers directly. And Google is looking to expand their business in different ways as well. There are rumors right now that Alphabet is trying to purchase HubSpot. And honestly, I hadn't really heard of HubSpot before, but they are basically a company that utilizes software and integrates a bunch of different resources across marketing, sales, and customer services for businesses. When you start thinking about acquisitions, the question should come to mind as to how this company will be integrated into the existing company's technology. So how will Google integrate HubSpot into their already existing ecosystem? The clear answer to this would be the fact that HubSpot provides advertising and marketing services. Google is obviously an advertising company. They allow customers and businesses to come in and advertise through Google search, and that is how they would integrate HubSpot. They would start utilizing their customers to come in and advertise on Google and provide more optimized search engine type of advertising to the already existing customer base within HubSpot. Currently, I don't know how I feel about it, but I do know that the US Department of Justice has had it out for a lot of big tech companies. They have filed antitrust and monopoly lawsuits against companies like Google, Apple, Amazon over the course of the last few years. And this has been a target of the administration that is currently in place to try and reduce some of these monopolies. However, it hasn't been to much success currently. And I don't know if this acquisition would actually get blocked, but I think it's important for Google to try and acquire the company if they plan to do so at a reasonable price. Keep in mind that no offer has actually been made, so there are people who are buying into HubSpot stock to try and arbitrage and get ahead of this deal. However, right now there's no offer, so we have no idea what the stock price would go up to if Google did try to buy the company. A couple things to mention here. We have seen the CEO of Google, Sundar Pichai, sell about 22,500 shares on April 3rd, and this was at a share price of $155.67 and resulted in a total value of $3.5 million. Keep in mind that we see a lot of CEOs sell shares early in the year, getting ready for tax season, so this doesn't necessarily mean that the company is going to be going through a bad period of time. He may just think that the shares are at a premium right now or a slight premium and want to recuperate some money for taxes. He could also just be selling them because he has some expenses coming up that he needs to cover. But one thing that is a little bit more interesting to me is there has been 61 insider sales and no buys over the past year. And here we can see that shown graphically. So green is buys, which you don't see any green lines. Red is sells, and then price is shown in blue. And one thing to note is that there were significantly more sales back in 2022. Right before the stock dropped, a lot of insiders were selling their shares when the stock price was sitting around $120 to $150. However, when the share price dropped down into the 90s and 80s, there were hardly any insiders selling because they knew that the stock was well undervalued. We're just now seeing the stock price get back to that 120 to 150 range, and really insiders are not selling at the same rate that we were seeing back in 2022. So this overall, in my opinion, is a positive thing, right? We are seeing sales ramp up slightly. However, this kind of speaks to the fact that Google is probably sitting around a fair value right now. And we can see something similar from their valuation. Their forward P ratio is currently sitting sitting at a 22.62. We can see over the course of the last year, it's been down to around a 19.27, but has kind of trended around this 20 to 23 range. And Google tends to trade below a lot of the other large tech players in the industry. Apple, for instance, is currently trading at a forward P ratio of a 25.97. So it tends to trade at a little bit more of a premium. Apple, in my opinion, has a little bit more stable of a business model. Google tends to react very negatively when ad spend goes down. And that is something that Apple doesn't really have. They have a lot more stable business where we don't see the large kind of fluctuations that can occur when the ad industry is kind of destabilized. Microsoft is in a very similar situation where they have a very stable business model. However, part of their business does compete directly with Google with their Bing search engine. They're currently trading at a forward P ratio of a 31.85. However, again, Microsoft is a very stable business. They have many different facets to their business. So when one is struggling, the others can kind of make up for it, and they still tend to continue to grow year over year. Where Google, that is not always the case. When we see poor economic conditions like we saw a year ago, that tends to affect Google a lot more than it does Microsoft. And analysts do have a little bit of growth built into Google. We can see that the average EPS estimate for Google is sitting at $6.79. This is up about $1 from a year ago of $5.80. We can see the low estimate is $6.15 and the high estimate is $7.51. Next year in 2025, analysts are expecting $7.82 of EPS. They have a low estimate of $6.89 and a high estimate of $9.07. So personally, I think if you've built out a good position in Google, it may not be a great time to buy. However, if you're looking to get into Google, I think now is still a fair valuation. I think you could get in, and if we start seeing interest rates drop in the back half of this year or early next year, that should have a good impact on Google's business, and that should help drive up their stock price. So I don't think the stock is severely overvalued where you shouldn't buy at all. However, I think, again, if you've built out a good position that you're happy with, maybe don't buy right now, just continue to hold. However, if you want to build out a position, just add some small shares here or there, 1, 2, 3 shares, whatever you're comfortable with. And then over time, if the stock falls, you can average down. If it continues to go up, then you're still in a good spot where you can capitalize on some of those gains. But keep in mind, do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. So I hope you enjoyed the video. If you did, drop a like down below. And if you want to see more videos like this one, make sure to hit that sub button. And as always, guys, have a wonderful rest of your day. And for the joke of the day, a market analyst is an expert who will know tomorrow why the things he predicted yesterday did not happen today. Thanks for watching, guys.